So you've got this critical shipping lane, right? The Strait of Hormuz. It's a global flashpoint. And right now, there's an explosive 48-hour ultimatum on the table. The situation is incredibly tense. But while all the headlines are screaming about threats of military action, there's a whole other story playing out. And it's not being told in press conferences. It's being told in probabilities and cold, hard cash. So let's dive in and see what the markets are actually betting on. I mean, it doesn't get much more direct than this. President Trump basically drew a huge line in the sand. Reopen the street in 48 hours or face the obliteration of key infrastructure. This isn't your typical diplomatic language. This is an ultimatum, pure and simple, and it's designed to force a super fast, decisive end to this whole standoff. And that really is the million-dollar question, isn't it? With a deadline that stark and a threat that severe, you'd think the answer would be pretty obvious. But, well, not so fast. To get a different angle on this, we're not going to look at the usual political analysts. No, we're going to look at where people are putting their money. And this is where things get really interesting. See, while all the headlines are fixated on military threats, the money is telling a completely different story. And to understand that story, we need to talk about something called prediction markets.
Okay, so what in the world are prediction markets? Think of it like a stock market, but for future events. So instead of buying shares in a company, you buy yes or no shares on a question, like, will the strait reopen by Friday? If a yes share costs, say, 30 cents, the market is basically saying there's a 30% chance of it happening. It's this really fascinating way to tap into the wisdom of the crowd.
So what are these markets saying about the Strait of Hormuz? Well, take a look at this. On a platform called Polymarket, traders are giving it just a 30% chance that traffic gets back to normal by the end of April. That means there's a 70% implied probability that this disruption is going to continue. That's a huge contradiction to that 48-hour ultimatum we just heard. And here's the real kicker. That 30% number, it's not just low, it's been falling, sharply. So as all the political talk has gotten hotter and louder, the market's confidence in a quick fix has actually tanked. The crowd is getting more pessimistic by the day, not less. This pessimism isn't just about the immediate deadline either. It goes way beyond that. So let's try to decode these probabilities and see what the longer-term forecast looks like. This chart from Kalshi illustrates it perfectly. Look, the probability of normal traffic only crawls up to 39% by the middle of May. It barely even crosses the 50-50 mark by the start of June, and it's still only at 59% by July 1st. So what the markets are telling us is that if there is a resolution, it's going to be a slow, gradual process that stretches on for months. So why? Why all the skepticism? Why would traders just ignore such a direct and powerful threat? Well, it's because markets crave consistency. This obliterate threat came just one day after the president was signaling he actually wanted to de-escalate. For a trader, that kind of back and forth isn't a sign of strength. It's a sign of unpredictability, which makes that hard 48-hour deadline seem, a lot less credible. It feels more like political posturing.
So this leaves us with two completely different versions of what happens next. On one side, you have this powerful public declaration, and on the other, you have the quiet, collective wisdom of the market. Two competing versions of the near future.
Let's just put them right next to each other. The official statement promises everything's going to be fixed in a couple of days, backed up by this massive threat. But the market bet, it's saying these disruptions will almost certainly last for months. It is just such a stark contrast between a political statement and a financial calculation. And that's really the ultimate takeaway here. It brings up this fascinating question about where we find the most reliable information when things get crazy. One story is loud, it's clear, and it's made for TV. The other is this complex whisper, spoken in the language of risk and probability. It really makes you wonder, when the headlines are shouting but the markets are whispering, which one is actually telling you the truth?